Hi guys, welcome back to TipRanks. My name is Annika and we love to hear what different stocks you guys like and are looking at. And in this video, we're going to be looking at the top 3 growth stocks based on EPS growth, so earnings per share growth. Dividends are a great way for investors to make passive income. Not only do they get returns from the upside potential of a share's price, but they can also receive income through dividends. Now, when I'm looking at stocks, I find it really useful to look at the TipRanks platform for guidance. So currently, TipRanks has a fantastic Black Friday sale for their premium plan. They're giving 30% off through from Thursday all the way till Saturday. So I've linked the coupon code for that down below in the description box. So without further ado, let's get into the video. So the first stock for great EPS growth is ROST Stores, and its ticker is ROST. ROST Stores and its subsidiaries operate 2 brands of off-price retail apparel. They also operate home fashion stores such as Ross Dress for Less and also DD's Discount. They're based in the United States and they have 1,589 stores based in 40 states. They offer in-season, name brand, designer apparel, footwear, accessories, and home fashion for great discounts. The current price for ROST Stores is $115.43. The analyst rating consensus deems it to be a moderate buy, and the analyst price target is $133.17 based on 6 Wall Streets offering 12-month price targets. ROST Stores reported its third quarter results and it provided fourth quarter guidance, and they reported earnings per share for the third quarter of $1.09 on the net income of $385 million. This compares to their previous EPS of $1.03 per share on net earnings of $371 million for the 13 weeks ended November 2nd, 2020. Sales rose by 19% to $4.6 billion, with comparable store sales also up a strong 14%. Their Chief Executive Officer, Barbara Rentler, commented that third quarter sales and profitability significantly exceeded our expectations, as consumers continued to respond favorably to our broad assortment of great bargains. We achieved these results despite waning government stimulus and uncertainty related to the spread of COVID variants. Operating margin of 11.4% was better than planned, though down from the previous year as leverage from robust sales gains were partially offset by ongoing headwinds from higher freight, wage, and COVID-related costs. Now looking at their dividends, their next ex-dividend date is December 6, 2021. Their dividend amount per share was 28 cents and their dividend yield was 1.01% with a payout ratio of 19.41%. As you can see, they have stable growth in dividends. Now their next reported earnings date is on March 1st, 2022, and this would be for the Q4 2021 period. The consensus EPS forecast is 96 cents and last year's EPS was 57 cents. As you can see, they have reported fairly stable earnings apart from Q1 in 2020 due to pandemic-related reasons. The TipRanks Smart Score is a 6 in that it is neutral when it comes to outperforming the market. Analyst ratings deem it to be a moderate buy. TipRanks investors, however, are very negative. Blogger opinions and news sentiment is bullish, but hedge fund activity has decreased and technicals are negative. But the fundamentals show that return on equity is 39.58% for the trailing 12 months. The second stock with great EPS growth is Louisiana-Pacific, and its ticker is LPX. Louisiana-Pacific Corporation provides building solutions for builders, remodelers, and homeowners. It operates through 4 segments: siding, orientated strand board, engineered wood products, and South America. Siding segment serves various end markets with a product offering including LP Smart Side, trim and siding, LP Smart Side Expert Finish, trim and siding, LP Builder Series lap siding, and LP Outdoor Building Solutions. The OSB segment manufactures and distributes OSB structural panel products, including its OSB portfolio known as LP Structural Solutions. The engineered wood products segment consists of LP solid start I-joist, laminated veneer lumber, and laminated strand lumber, and other related products. This segment also includes the sales of I-joist and LVL products produced by joint venture and sales of plywood. South America segment manufactures and distributes OSB structural panel and siding products in South America and certain exports. The current price for LPX is $70.72, and the analyst rating consensus deems it to be a strong buy. Analyst price target on LPX is $86.67, which is a 22.55% upside based on 3 Wall Street analysts offering 12-month price targets. Louisiana-Pacific Building Solutions reported their third quarter 2021 results. They also provided a fourth quarter outlook. The key highlights were as following. Net sales increased by 53% to $1.2 billion. Siding Solutions net sales increased as well by 19% to $310 million. OSB net sales increased by $232 million to $600 million, $225 million of which was due to higher OSB prices. Net income attributable to Louisiana-Pacific was $365 million. Cash provided by operating activities was $511 million. Adjusted EBITDA was $522 million. The ex-dividend date just went by on November 5th, 2021. And the dividend amount per share was 18 cents with a 0.97% dividend yield with a 4.97% payout ratio. As you can see, they have kept their dividends fairly constant. The next earnings report date will be on February 15, 2022 for the Q4 2021 period. The consensus EPS forecast is $1.76, and last year's EPS was $2.01. As you can see, their earnings have reported quite consistently in the quarter if you look at the orange bar. The TipRanks Smart Score deems it to be a 7 in that it is neutral when it comes to outperforming the market. Analyst ratings deem it to be a strong buy. TipRanks investors, however, are very negative. Blogger opinions and news sentiment, however, are bullish, despite hedge fund activity having decreased. Technicals have been positive, and insider activity shows that many have bought shares, and fundamentals show that return on equity is 114.66%. The third stock with EPS growth is ConocoPhillips, and its ticker is COP. ConocoPhillips engages in exploration, production, transportation, and marketing of crude oil, bitumen, natural gas liquids, liquefied natural gas on a worldwide basis. The current price for ConocoPhillips is $73.78, and the analyst rating consensus is that it's a strong buy. The analyst price target is $92.56, which is a 25.45% upside based on 18 Wall Street analysts offering 12-month price targets. ConocoPhillips announced its third quarter 2021 financial results on November 2nd, and they reported earnings of $2.4 billion, which was around $1.78 per share. And this was compared with the third quarter 2020 loss of $0.5 billion, or negative 42 cents per share. They've delivered strong operational performance across the company's asset base, which resulted in third quarter production of 1,507 MBOED excluding Libya. Cash provided by operating activities was $4.8 billion. They also distributed a total of $4 billion to shareholders year to date, and this comprised of $2.2 billion in share repurchases and $1.8 billion in dividends. They also increased their quarterly dividend by 7% to 46 cents per share. Ryan Lance, the chairman and chief executive officer, emphasized about how ConocoPhillips benefited from the constructive price environment. He also mentioned the previously announced operating cost synergies that were delivered and that they're executing their core programs across all parts of the business, and their returns on capital remain peer-leading. He attributed the positive performance to the exceptional platform for pending acquisition of Shell's Permian properties that were announced in the quarter and expect to close in the fourth quarter. He also says that this transaction should further strengthen ConocoPhillips' ability to deliver distinctive triple mandate, meet future energy demand with the lowest cost of supply production through the energy transition, as well as deliver competitive returns and meet their net zero ambition on operational emissions. The ex-dividend date has passed, and it was on October 27, 2021, and the dividend amount per share was 46 cents, which was 7% higher than in the previous year. This delivers a 2.51% dividend yield and a 49.44% payout ratio. As you can see, their dividends have been fairly constant, but actually increasing. Their next earnings report will be on February 3rd, 2022, and this will be for the Q4 2021 period. The consensus EPS forecast is expected to be $2.11. And this is a very positive EPS forecast compared to last year's EPS, which was negative 19 cents. As you can see, they did have positive earnings in Q4 2019 and Q1 2020, and they did see negative earnings which may have been pandemic related, but also due to the fact that around this point, crude oil prices and oil prices were negative. But since Q1 of 2021, they've shown increasing earnings per share, as you can see. The TipRanks Smart Score deems it to be a 7 in that it is neutral when it comes to outperforming the market, but it is more skewed towards outperforming the market. Analyst rating consensus deems it to be a strong buy, but TipRanks investors, however, are negative. But blogger opinions and news sentiment is bullish. But hedge fund activity and insider activity decreased. Technicals, however, have been positive and fundamentals show a 12.50% return on equity. So guys, what do you think of these 3 EPS growth stocks? Leave your thoughts in the comments below. We'd love to hear from you. And as you can see, it's so useful to use the TipRanks tool to look at different stocks. And we have that fantastic Black Friday sale where you get 30% off on the premium plan. And that is running from Thursday through to Saturday. I've linked the coupon code down below in the description box. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Remember, this is not financial advice. I'll see you guys in the next video. Bye!